June inflation finally fell, the first drop in 6 years. Now, Bitcoin is ripping back towards $65,000, while Fed Chair Warsh stays defiantly in favor of higher rates. Wednesday, July 15, 2026. Like and subscribe for daily market updates. Today's agenda: top story, market snapshot, macro and central banks, geopolitical status, commodities, crypto pulse, earnings/IPO and deals spotlight, closing summary. Up next, market snapshot. It's Wednesday, July 15th, and the mood has flipped from panic to relief. Crypto is ripping back, with Bitcoin climbing towards $65,000 and Ethereum leading the charge, up around 5%. The spark was Tuesday's inflation report. U.S. consumer prices actually fell in June, the first monthly drop in 6 years, and core inflation cooled more than expected, reviving hopes that the Fed's next move could be a cut rather than a hike. A massive short squeeze poured fuel on the fire. But temper the euphoria. Fed Chair Warsh stayed defiantly in favor of higher rates. A fresh wholesale inflation report lands today, and two wars are still keeping oil elevated. This rally is real, but it's on a short leash. But why is inflation cooling so fast, and what does the Federal Reserve actually think? Risk is back on. Leading the charge is crypto. Bitcoin has surged about 3.5% towards $65,000, breaking above a key downtrend line, while Ethereum jumped around 5% to near 1900, outrunning the pack. Stocks are riding the same wave. On Tuesday, the S&P 500 rose after Monday's slump, and the Nasdaq climbed about 1%, and futures point higher again today, powered by chips. Equipment giant ASML posted stellar results and raised its full-year forecast on booming AI demand. Not everyone joined the party, though. IBM cratered about 22% on a revenue miss, while PayPal soared roughly 16% on a reported $53 billion buyout offer from Stripe and Advent. Oil pulled back from its highs after President Trump dropped a threatened toll on the Strait of Hormuz, and gold steadied around 4,100 after its wild week. The 10-year Treasury yield eased. The one cloud over the rally. Fed Chair Warsh testifies again today, and a wholesale inflation print is due that could quickly change the tone. However, geopolitics keeps a floor under oil prices, which complicates the picture further down below. The whole rally traces back to one number. June's Consumer Price Index showed headline prices actually falling on the month, the first monthly decline in 6 years, driven by cheaper energy, which dragged the annual rate down to about 3.5%, while core inflation, stripping out food and energy, cooled to about 2.6%, below the roughly 2.9% economists expected. That was the softer reading markets had prayed for, and it flipped the narrative. The odds of a July rate hike collapsed, a hold is now the overwhelming bet, and talk of eventual cuts crept back, which is rocket fuel for risk assets like crypto. But here's the catch, and it's a big one. Fed Chair Warsh refused to play along. In his testimony, he vowed to defeat inflation and declared the price surge of the last 5 years will be a thing of the past, a distinctly in favor of higher rates message, and he is back on Capitol Hill today before the Senate. On top of that, the June wholesale inflation report, the PPI, lands today and feeds directly into the Fed's favorite inflation gauge later this month. Economists expect wholesale prices barely rose on the month, though the annual rate is still running hot near 6%. So the market and the Fed are telling two different stories. If PPI runs hot or Warsh doubles down, the rate cut dream and the crypto rally riding on it could deflate fast. That brings us to commodities. The wars have not ended, but one of them cooled just enough to help. On the Iran front, President Trump abandoned his threat to slap a 20% fee on every ship crossing the Strait of Hormuz, a climb down that pulled oil back from its highs and eased the worst of the supply panic. The strait, which carries about a fifth of the world's oil, is still contested after a week of U.S. strikes and Iran's closure claim, and Washington is pressing Tehran back toward talks, but the immediate temperature has dropped. The second front, though, keeps a firm floor under oil. In Ukraine, Kiev's long-range drones are still hammering Russian refineries, export ports, and shadow tankers, choking a major slice of Russian supply and stoking fuel shortages inside Russia, even as Russia keeps bombarding Ukrainian cities. Two simultaneous conflicts, both squeezing crude, are why oil can ease on a headline yet refuse to fall far. For crypto and gold, the link runs through inflation. As long as war keeps a floor under oil, it keeps a floor under inflation, and that is what emboldens in favor of higher rates Fed. Today's Commer tape leans on the bet that neither war escalates further this week. Analysts warn the calm is tactical, not a peace, and either conflict could flare again with little notice. Treat every fresh headline from either front as fast-moving, and until confirmed, unconfirmed. This brings us to the real star of today's show, where money is flowing into digital assets instead of gold. Oil finally took a breather. After Brent crude spiked almost 10% on Monday to around $84, its sharpest single-day jump in over 6 years, prices eased once President Trump dropped the threatened Hormuz toll, with Brent slipping back in U.S. crude cooling from its peak. Do not mistake the dip for calm, though. With Iran's blockade and Ukraine's strikes on Russian energy both live, the war premium is still baked in. Gold, meanwhile, is catching its breath around $4,100 after a brutal stretch. A near 3% crash below $4,000 on Monday, followed by a sharp bounce. It remains down about 26% from January's record, near $5,600. Silver hovered near 58. The real tell today is rotation. With inflation cooling and risk appetite returning, money is flowing out of defensive havens and into the assets that thrive on cheaper money, namely stocks and above all crypto. When fear fades, gold sags and Bitcoin flies. Which leads to earnings/IPO and deals spotlight. This segment focuses on crypto's strongest day in weeks, led by Ethereum. Bitcoin rose roughly 3.5% toward $65,000, decisively breaking above the descending trend line that capped it for months. A technical breakout bulls had awaited. However, Ether was the standout, up about 5% near $1,900, extending yesterday's 6% surge and continuing to outpace Bitcoin as the Ether-Bitcoin ratio climbed. The drivers are stacking up. Cooler inflation reviving rate cut hopes, one of the largest short liquidation events in recent memory forcing bears to buy back, steady inflows into crypto funds, and growing optimism that the Clarity Act will pass, providing institutions with clear rules. On flows, the picture is choppier than prices suggest. Crypto funds booked a rare weekly inflow earlier this month, but Monday's sell-off triggered heavy redemptions, keeping conviction shaky. Even a government transfer of nearly $300 million in seized coins to an exchange did little to dampen today's mood. Solana held near $77 and XRP near $1.1, both higher. Yet the reality check every honest analyst owes you. The fear and greed index has only crawled from 22 to 25, still deep in extreme fear. This looks more like a violent short squeeze than fresh conviction buying. Bitcoin dominance holds near 56%. Resistance sits at $65,000, then mid-$60. Support is back around $62,000. For Ether, reclaiming $2,000 remains the bull's goal. Caution flags remain with Citigroup still carrying an $82,100 12-month Bitcoin target until Warsh softens. Treat every rip as a rally to prove itself, not a trend to trust blindly. Finally, let's wrap up with what matters most for your money right now in the closing summary section below. Earnings are flooding in, and the AI trade just got a jolt of confidence. Chip equipment giant ASML posted stellar quarterly results and raised its annual sales forecast, citing surging demand for the machines that build AI chips, a powerful signal for the whole semiconductor complex. The banks delivered too. JP Morgan blew past revenue expectations, and Wells Fargo and Bank of America both beat, though a few of the stocks slipped on profit-taking after a huge run. The ugly outlier was IBM, which crashed about 22% after its revenue badly missed. The flashiest headline was a deal. PayPal jumped roughly 16% on reports that Stripe, and Advent International offered around $53 billion to take it private. Still to come today are Morgan Stanley, BlackRock, Johnson & Johnson, and United Airlines, with Netflix on deck for Thursday. Finally, let's turn to closing summary. So here's the state of play. A genuine relief rally, led by crypto and especially Ethereum, built on the hope that cooling inflation finally lets the Fed ease. The single biggest risk is that the hope is premature, that today's wholesale inflation report runs hot or Fed Chair Warsh keeps hammering his in favor of higher rates line, either of which could yank the rug from under stocks and crypto alike. The single biggest opportunity is momentum. A soft PPI, plus a genuine de-escalation in the Gulf could turn this short squeeze into a real trend and send Ether through 2,000. Between now and the close, watch three things: the wholesale inflation print, Warsh's tone in the Senate, and whether Bitcoin can hold 65,000. The mood has turned, but the Fed still holds the leash. If you want this map before every open, subscribe and we'll see you tomorrow. So here is the state of play. We are witnessing a genuine relief rally driven primarily by cryptocurrency assets like Bitcoin and Ethereum, fueled by the unexpected cooling of inflation, which finally allows hope for Federal Reserve rate cuts. However, this optimism faces significant challenges as Fed Chair Warsh remains steadfastly in favor of higher rates in his testimony today, potentially undermining market investor mood if he doubles down on fighting price surges, or if the pending wholesale inflation report comes in hotter than expected. Thanks for watching Market Pulse Daily.